Imagine betting billions on a futuristic gamble where the payoff isn't guaranteed. That's Meta's bold plunge into AI right now, and it's shaking up investors like never before. But here's where it gets controversial: are they building the next big thing, or just sinking money into a digital abyss? In the middle of an incredible AI expansion across tech giants, Meta is outspending almost everyone else. They're constructing 2 enormous data centers, think massive warehouses filled with powerful computers crunching data at lightning speeds, and reports suggest they're planning to invest up to $600 billion in U.S. infrastructure over the next 3 years. For beginners, data centers are like the beating heart of AI, storing and processing vast amounts of information to train smart models. These numbers might sound routine in Silicon Valley's high-stakes world, but they're raising real concerns on Wall Street, where investors watch every dollar closely. The tension peaked this week during Meta's quarterly earnings report, revealing that operating expenses, the day-to-day costs of running the business, soared by $7 billion compared to last year, with capital expenses, big investments in things like buildings and tech, hitting nearly $20 billion. All this cash was poured into hiring top AI talent and building that infrastructure, yet it hasn't translated into significant new income for the company. When financial experts quizzed Mark Zuckerberg for details on the earnings call, he made it crystal clear that this spending spree is far from over. He explained that accelerating AI development was crucial for the company's future, emphasizing the need for advanced computing power for research and new innovations. The right thing to do is to try to accelerate this to make sure that we have the compute that we need, both for the AI research and new things that we're doing, and to try to get to a different state on our compute stance on the core business, Zuckerberg told them. He hinted at exciting possibilities with models from Meta's Superintelligence Lab, MSL, promising groundbreaking capabilities that could unlock huge untapped potential. But if he aimed to calm the markets, it backfired spectacularly. By the call's end, Meta's stock price had tanked, and 2 days later, the decline worsened. Shares fell 12% by Friday's close, wiping out over $200 billion in market value. That's like losing a small country's GDP in paper wealth. Now, stock prices can be volatile and don't always reflect the full picture, but in pure financial terms, Meta's results weren't disastrous. They still posted a solid $20 billion in quarterly profits. Yet, this was the first time their heavy AI investments visibly ate into the bottom line, the net profit after all costs. More worryingly, with all those huge data centers and highly paid AI experts on board, it was unclear what tangible benefits the company had gained so far. Analysts pushed Zuckerberg for clarity on why the big spend and when revenue might follow, but he could only offer vague promises about AI's bright future, as there were no specific budgets or ready products to back up forecasts. To put this in perspective for newcomers, think of it like investing in a startup. You pour money in early, hoping for explosive growth, but without a proven product, it's risky. And this is the part most people miss. Meta's timing on the call coincided with a planning gap, leaving Zuckerberg to rely on broad assurances. He mentioned upcoming products for various content types, building on their AI advancements, and how smarter models could enhance their core apps like Facebook and Instagram, improving features from recommendations to ads. But here's another controversial twist: Meta isn't alone in this AI spending frenzy. Google and Nvidia had strong quarters without investor panic, and OpenAI is blowing through cash at similar scales but with more financial breathing room. Some wonder if we're inflating an AI bubble, where hype outpaces reality. If that's the case, Meta's established social media empire might help them weather the storm better than startups. Take OpenAI's Sam Altman, for example. He justifies their massive compute costs by pointing to a rapidly expanding consumer service generating $20 billion annually in revenue. Sure, we can debate how long that growth will last, that's a topic for another discussion, but there's a real, growing product behind their buzz. Annual recurring revenue, ARR, which is the predictable income from subscriptions, makes OpenAI's story more convincing to skeptics. Meta, however, lacks such a standout success. Their flagship AI tool, the Meta AI Assistant, boasts over 1 billion active users, a huge number, but likely inflated by the billions already using Facebook and Instagram. It's not yet on par with competitors like ChatGPT in terms of advanced features. Then there's Vibes, an AI video generator launched recently, which spiked app downloads and daily users, showing promise in engaging content creation. But its impact feels limited, mostly boosting activity without clear business gains. The most ambitious effort is the Vanguard smart glasses, released this month, blending augmented reality with some AI elements, but it seems more tied to Meta's virtual reality experiments than a full-fledged AI breakthrough. In essence, these feel like intriguing tests rather than polished, market-ready offerings. It's revealing that when questioned about the infrastructure costs, Zuckerberg didn't spotlight these recent releases but instead gazed forward. He expressed enthusiasm for novel models and products from superintelligence, stressing that it's about more than just an assistant. It's not just Meta AI as an assistant, he shared. We expect to build novel models and novel products, and I'm excited to share more when we have it. Yet, during an earnings call, not a product unveiling, he could only tease updates in the coming months. Clearly, the market is losing patience with these delays. Fair play, it's only been 4 months since Zuckerberg revamped Meta's AI teams, and the new superintelligence group needs time to deliver something revolutionary. Still, with billions flowing out to keep pace in AI, there's no definitive vision for Meta's role in this evolving landscape. Could Meta AI leverage the company's vast personal data trove to rival ChatGPT? Might Vibes be the start of an entertainment revolution, fueled by targeted ads? Or are hints about business AI signaling a push into enterprise solutions? Right now, it's anyone's guess, and the clock is ticking for Meta to uncover the answer. Is this massive spending a smart bet on the future, or a reckless gamble that could leave investors burned? Do you think Meta's AI strategy will pay off, or should they pivot to something more concrete? Share your thoughts in the comments, I'd love to hear your take.